Thank you, Rishabh. Our first topic is capital market. The Indian capital market is one of the oldest capital market in the world. Capital markets are the financial markets for buying and selling of long-term debts or security-based securities. These markets channel the wealth of savers to those who can put it to long-term productive use, such as companies or government making long-term investments. Now, I would like to call on dais our first paper presenter, Mr. Sulabh Gupta.
One of the funny things about stock market is when one person buys, another sells, and they both think that they're clever enough to beat the other. A very good morning to the respected chairperson, members of the jury, and all my friends who are gathered here. Well, let me teach you the concept of capital markets with a small and interesting story. As you can see on the screen, our investor is the man who idolized the phrase, "I'm Batman." He's a very own Bruce Wayne. Now, Mr. Wayne is a very poor man. You know that, right? Yeah, he's so poor, he owns just 2 rolls and 1 Ferrari. Now, he has some savings, like small amount of savings, just merely 5 crore rupees. He wants to invest them somewhere because he's scared of his nemesis. His nemesis, the Joker. Why? Because Joker doesn't want to steal money. He likes to burn it. He wants the world to suffer. Well, most of us do. So, but moving on, he shortlisted some of the opportunities where he can invest money. And the best 2 options that came across were banks and capital markets. So banks are the safest option to invest money. Like they offer fixed interest rates, they offer guaranteed returns, the money is safe, there is no risk. On the other hand, capital markets are risky. Like the return is not guaranteed, but the return is slightly higher. The probability of return is slightly higher than that of the banks. So, as the Batman likes to take risks, he went for the capital markets. Now, being a fresher, he didn't have much knowledge about capital markets, so he invited his friend, the man from money himself. Let me define this man. As he defines himself, the billionaire, playboy, genius, philanthropist, Iron Man, Tony Stark, as we call him. So Tony Stark, the man from money, advised him that capital markets has some numerous terminologies. So let's study them first. What exactly are capital markets? Capital market is a source for government and corporates to raise long-term capital. Right, so here trading of securities is done. Securities can be in the form of shares, bonds, derivatives, anything. Capital markets are primarily of 2 types. First is primary market, second is secondary market. Primary market is where the fresh issue of securities is made. Like IPOs, initial public offering, private placements, these are carried out in the primary market. Then we have the secondary market. They are the securities that are actually trading in the market, that have been already issued, are traded, like bought and sold. Stock exchanges play a major role in secondary market. Right? So securities that are being traded, as I already told, are shares, debentures, bonds, then we have the derivatives. Right, so now let's come to the concept of demat. Anyone who knows the meaning of demat or the full form of demat? Dematerialization, exactly. What exactly is dematerialization? It's conversion of the physical form to electronic form. Earlier, physical share certificates were being traded. With the introduction of demat accounts, dematerialization concept, these are converted into electronic form. Now, who does that? Depositories is the term we use for the organizations that convert the physical form of electronic certificates, to electronic form. Right, so depositories primarily are NSDL, that is National Securities Depository Limited, and CDSL, Central Depository Services Limited. So depository participants are the ones who take the service of the depository and outsource it and distribute it to the clients. Right, investment brokers, banks, these are the depository participants that we have. Now, taking the advice of our advisor, Mr. Iron Man, Bruce Wayne invested his 5 crore rupees, the small amount of savings, He invested in the capital markets. He made large amount of transactions. Like buying, selling, he saw an opportunity, he bought. He saw an opportunity, he sold. But this led to a net negative position of his. He made some profits, he made some losses. But the net position was negative. So our dear friend, Mr. Tony Stark, gave him a beautiful piece of advice. He said, investments is like watching paint dry or watching grass grow. It takes time. If you want excitement, take your money and go to Las Vegas. With this, he introduced some new products to our investor, Mr. Bruce Wayne. The products were derivatives. Now this topic really haunts most of us in our SFM exam and final. Derivatives. Anybody? Well, derivatives are a product or an arrangement that derive their value from an underlying asset or security. So the major derivatives that are being traded in the market are futures and forwards. These are two simultaneous terms, parallel terms. Then we have options. So what exactly are futures and forwards? Normal deals are we trade today, we settle today. Like autumn deals are we trade today and settle in T+2, 2 days afterwards. But forwards are we make a trade today, we enter into the contract today and we settle it at a future date. That future date can be 1 month, 2 months, 10 years, anything. Depends on what type of contract it is. So forwards are OTC, are traded in OTC market. OTC is over-the-counter exchange. Over-the-counter exchange means both the parties are known to us. Like my friend Kushik here and I, we enter into a contract. Right? So I know him, he knows me. We can customize the contract, we can negotiate the terms of the contract. Futures are exchange-traded contracts. The characteristics are primarily similar to the forwards, but futures are different in a way that they are standardized because they are exchange-traded. You don't know who the other party is. Alright, then we come to options. Options is a very interesting and very, we can say complex at the same time, but very rich. It can make you rich. Options is a very interesting product. What exactly option is? Option gives you a right to buy or a right to sell. Call option is, as the name suggests, call. You're calling a security. So it's a right to buy. On the other hand, put option is, as the name suggests, you're putting it back into its place. So it's the put option. It's a right to sell. Now let's take an example. Suppose the option writer or the option seller is a very new Mr. Stark. Right? Option buyer is our investor, Bruce Wayne. He pays a premium of ₹5 in order to buy a call option at a strike price of ₹100. Now what strike price is? Strike price is the price of the underlying at which it is agreed that the trade will be settled at a future date, whenever the option is exercised. Now, the strike price was, what was the strike price, guys? One is listening. What was the strike price that was initiated? 100, exactly. And the share premium paid was, option premium, ₹5. So now at the settlement date, if the strike price of the underlying goes to 120, what would be the position? Will Bruce Wayne exercise his right? Yes, he will, because he's getting the security at 100 rupees, whose market value is 120. On the other hand, if the price falls to 80 at the delivery date, then he will not exercise because he's getting the same security at ₹80 from the market. His net loss would be the option premium, that is ₹5. Now there are many types of participants in the market. The three main being hedgers, arbitrators and speculators. Hedgers is someone who likes to minimize his risk. He acts smart. He takes some products or some arrangements in order to minimize his losses or risk. On the other hand, speculators plays on people's fear. They speculate. They purchase a security with the hope that their value will increase in future. Last would be arbitrators. These are the smartest of all. They make riskless profits. They encash on the opportunities that market provides. There are seconds of intervals when there are differences in the market, in a commodity or in a price or in a share in a security. They encash that opportunity. That small differences time intervals. So let me ask you something, guys. Pay attention. Here, Mr. Tony Stark, he likes to make riskless profit. Right? Which one is he? Arbitrator, speculator, or hedger? Riskless profit he wants to make. He encashes on market opportunities. We have the joker. He likes to speculate. He likes to play on people's fear. Which one is he? Speculative. And right. And Mr. Wayne is fresher, so he wants to play safe. He just wants to minimize every risk that he takes. Which one is he? Hedger. Correct. Now let's come to what role does the capital markets play in the Indian economy? Right. There is a market, so it must play some role in the Indian economy, right? First one being mobilization of savings. We small people have small savings and encash a greater return than we get in banks. We choose capital markets. So capital markets provide us an opportunity to mobilize our savings and channelize them into capital formation. Government, etc. use capital markets to increase their capital formation. Then we have capital formation as a source of foreign capital. FDI. This term you will be hearing a lot in the recent times. Right? Foreign direct investment. Well, capital markets play a major role in that because they help in encashing the FDI that is coming to India through investing in securities. Then it's a source of long-term capital fund. Now what does this mean? Long-term capital fund. See, when a company raises a capital, the capital remains intact even though the security is brought and sold. Like if I purchase a share of Reliance, I have invested in the capital of Reliance. Now if I sell that share to my friend Sunny here, this won't affect the capital of Reliance. It was just my assets position. My securities will go to him. I sold it to him. The capital of Reliance company stays intact. So it's a source of long-term capital funds. Another feature of capital markets is liquidity. It's a readily available market, highly liquid. You can just trade and purchase securities very easily these days. You can just use an investment broker to do. Now to conclude, I would like to quote Mr. Benjamin Franklin. He said, investment in knowledge is the best investment. So let's see Mr. Wayne, let's advise him to first invest in his knowledge about the capital market, about its working, about its terminologies, and about the fundamentals of the company in which he's investing. That's the most important part. Because if you don't have enough knowledge about the stocks, you're of course what to lose most of the time at least. Now I know many of my friends here, fresh minds would be thinking, itni complexity, itni terminologies, kaise yaad hogi? It's easier, it's safer, and it's simpler to invest in banks, right? Well, let me ask you one simple question. How many billionaires do you know who have become wealthy merely by investing in savings accounts? I rest my case. Thank you.
Let's move on our second topic of this session, budgetary planning and the time management.